Welcome back, everyone. Today, our topic is about profit and loss account, its meaning, features, and performance. We'll look into everything. Before going further, have you ever wondered how a business actually knows if it's really making money or just spending it all? You think a business owner will think that he had invested so and so capital and he got so and so profit? You think is it that simple? Well, no. And here is where the profit and loss account comes in. The financial report card of every business. It's a simple yet powerful tool that shows the profits earned or the losses suffered over a period of time. And trust me, it tells quite the story. Whatever happened in that whole year, you can sense by profit and loss account. In this video, we'll break down what a profit and loss account really means, its key features, and how its performa is actually made. Whether you're a student, a business owner, or just curious about how business tracks performance, this video is your perfect starting point. Let's dive into the world of profit, losses, and everything in between. Let's understand what a profit and loss account is first. The story of a business's performance. Let's take an example. Imagine you're running a business. At the end of the year, you would obviously want to know if you made profit or suffered loss. And that's where profit and loss account comes, as we already discussed. It's like a report card because it shows how well you did or how poorly you did. Now, the profit and loss account is one of the main financial statement which tells you the financial result of your business, which is known as net profit or net loss during that accounting period. On the debit side, it records all the indirect expenses and losses. The things like salaries, rent, advertising, basically costs that keep your business running. And on the credit side, it shows all the indirect incomes like rent received or interest earned or basically the money that comes from sources other than direct sale. At the end, the differences between the total income and expenses is calculated and that will result in your net profit or net loss, which is then transferred to the capital account. Now, as we know what actually profit and loss account is, let us see its features. The first one is that it follows or it is based on the principle of nominal account. What does it say? Which means that it records all the expenses and losses on the debit side and incomes and gains on the credit side. Then, the second is that it is the second stage in preparing of final accounts, which means it is prepared after the trading account is completed. The next point is that it is a type of financial statement which is prepared at the end of accounting period. As we have already discussed, it's made once in a year, not throughout. The next one, it shows profit or loss position of the business. It clearly tells you whether the business made a profit or faced a loss. In the fifth point, it is prepared by considering all indirect incomes and expenses. In the trading account, all the incomes, expenses, profit, etc. is recorded based on the direct profits and direct expenses of the company, which means the actual purpose of the company, actual production, goods, everything related to that. Whereas in profit and loss account, it is all about indirect expenses and loss and profits. The next one is that it follows a curial concept of accounting principles for ascertaining the results, which means it records income and expenses when they are incurred and not when money is actually received or paid. So imagine you have to pay salaries or you have to pay rent in the next month, but still you are making your financial statements end by this month. So what will you do? Prepaid salaries, because that is for this month, but still you are paying it on first. So it will be prepaid salaries or the salaries which have to be paid. In that way, it will be mentioned. because the service had been taken. You have to pay it. So you mention it. The next one is that it is a periodical account. It is not operated throughout the year. It is prepared after a certain period. As we have already discussed, it is prepared once in a year, at the end of the year. Then it considers only the transactions related to a particular year for which it is prepared. So, as we were discussing from the starting, that it is prepared for a particular period of time. Hence, all the information is also related and concerned with that particular period of time only. And this again brings us back to the accrual concept, which says you have taken service in this month. So, though you are paying next month, it is related to this month. Hence, it is recorded. Moving on to the next features. It includes operating expenses, office expenses, selling and distribution expenses, depreciation on the debit side. Like all other expenses except for what you're directly making for your goods, all those expenses are recorded on your debit side. The next one, it includes income from different sources except for income from sales. If you ever observe trial balance, the only income will be sales, where here you will have interest earned or commission received, rent earned. So, like that, all other expenses, matlab, all other profits will be mentioned here on credit side. The next one, it determines net profit, which is used to compare net profit of previous and succeeding years. So, net profit also involves gross profit, which is made by trail balance. So, this net profit is the one which is compared with previous years and succeeding, matlab future years. And the last feature, the balancing figure of profit and loss exhibits net profit or net all of the business which is transferred to capital account under balance sheet liability side, which means the final net profit or loss is moved to the capital account which appeals in the liability side of the balance sheet. So these were the features of profit and loss account. This is the performa of a profit and loss account. And here where the performa is written, there you will be writing profit and loss account of so and so period for the period of ending. Sorry, profit and loss account of so and so company for the period ending on so and so. Whenever you are making it, the end of the year, that will be mentioned. And one will be debit side, one will be credit side. Under the debit, you will have gross loss if it is occurred, then salaries, rent, taxes, fire insurance premium, repairs, maintenance, depreciation, audit fee, bank charges, legal charges, discounts if you allowed, carriage outwards, or any other miscellaneous expenses. Everything will be onto your debit side. On the credit side, you will have gross profit, then interest earned, then commission received, rent earned, or profit on sales of fixed assets. If you're selling any of your fixed assets, your machinery, that profit, then income from your investments, then sale of scrap. If you're producing some iron material or steel material, and some, obviously, you cannot use the whole plank of which you bought. So, that parts you sell them, and when you sell you get some money, so that will be the sale of scrap. Then miscellaneous incomes if you're having any, then also any other income which is indirect except for sales, all that will be mentioned in your credit side. So this is the performer of a profit and loss account. Hence this is all about profit and loss account, its features and its performer. Thank you.